So, welcome everyone. I'm Alexander Mihalcha, and today we have one of the industry leaders, Luke Spencer-Wilson, CEO and co-founder of Sky Infra Capital. Welcome, Luke. How are you doing today?
I'm very well. How are you?
I'm great, and I'm excited to have you on the podcast today, and I'm sure you're going to be of great value for the audience.
I
Now,
hope so.
before we dive in, could you give us a quick overview of what Sky Infra Capital does?
Going for Capital is a private equity deal execution team looking at clean energy and power investing, both here in the UK and globally.
Okay, that's fascinating. But what inspired you to create Sky Infra Capital? And when you saw that opportunity, what gap in the market did you realize no one else was solving?
And so probably step back a bit. I've always been involved in traditional finance and I've always been fascinated by how um, capital shapes industries and long-term economic outcomes. And with a background coming from investment bank Merrill Lynch and then working at a hedge fund, it's been a natural transition to move towards a private equity style investing. And more recently, I have been a COO of a private equity firm which made investments into the hydrogen economy. And this was an opportunity where we can sort of more broaden our investing universe. So slightly more outside of the realms of hydrogen, but looking at also other clean energy, renewable energy sources such as solar, wind, battery, and more latterly nuclear. And the landscape is quite a broad investing sphere, and it's moving as we move more towards renewable energies, and it seemed like a good opportunity. And it's been well received by investors, and we look to grow in that space.
Okay, interesting about that. But for example, like if you're looking back at those early days when you started your career, like what do you wish you've done differently?
To have done differently, that's a really interesting question. Maybe stayed with the capital markets world, but it has a very can have very turbulent times. What I've come to enjoy more so is investing into real assets. I think people and investors um, have grown. That I mean, there's a place for both, but real assets on a longer term value play. Things that you can touch and feel and see,
Hmm.
whereas a lot of what the capital markets now is very much algorithmic trading against numbers, and the downturn, I suppose, in what humans actually do on a trading floor and things, they've all been superseded by computers. But yet in the real asset world, there is still, it's very much a human interaction that gets a deal done, and also investors see real assets, be it buildings, lands, ships, whatever
Yeah.
it may be. And there's a real tangible, okay, that they can see it, feel it, touch it, and it does actually make a difference. And if you want to do legacy items, it's very interesting, to leave something good behind before we depart depart the earth. And if we're kind of trying to provide clean energy power for future generations, this is the start of probably uh, a new generation of how we're going to evolve. So that
Right.
that that excites me, um, going forward. So yeah.
Yeah, right, makes sense. But because like you mentioned about your previous work, so what are the lessons from Merrill Lynch, hedge funds, and private equity that shape your current approach?
So I guess working at large institutions, taught me a lot about discipline, how to analyze companies, understand risk, think in terms of investing cycles, and then you go into a smaller hedge fund environment, which is very niche, um, you know, and that taught me the value of speed and adaptability. Um, but private equity has also given me the opposite sort of perspective of long-term ownership, uh, and, patient capital,
Hmm.
and the importance of alignment with management teams, and putting that all together. I can sort of focus on a hybrid approach, public market awareness in private market practice, but always governed, with a high degree of governance around it and framework.
Yeah.
Accountability by directors, by investors, by management ourselves. With a deep emphasis on understanding how real assets and long dated cash flows work. So not short term, terms. These are long term plays, and having the ability to gently maneuver something so that it takes you on that long term. Whereas capital markets is quite instantaneous and very reactionary, and it has some good to it, but the longer term investing just allows for there to be a few more bumps in the road, but generally you can steer the ship on a longer path.
Right, right, makes sense. And basically, like, could you elaborate on why the existing solutions weren't meeting these needs?
Because the portfolio was heavily geared to one type of power, which was trying to build a hydrogen economy. It's quite a narrow investing um, thesis, and hydrogen has a most definite role to play, um, but it was very hard to make the economics work for it currently. But when you have a broader remit where you can use other renewable powers such as wind, solar, battery, nuclear, it's a wider investing universe,
Yeah.
um, and therefore there are most definite investable items there that can give you the good returns that you'd want, over a longer period. Hydrogen has definitely a role to play, but it's until they can work out, and the technology's there, and the price parity. Hydrogen is still challenging, to overcome the oil and gas market. You need to get it at a price parity that you get off takers, i.e., customers that are willing to pay for it at the
Yeah.
same price that they're paying for it now, and it's quite binary, in
Hmm.
as much as the world is expect the cost of crisis living and fuel is only going up, and people aren't willing to pay more when they can't afford what they've got now. So it needs to come down, or at least be in parity, that people will actually. And then you've got all the infrastructure supporting that needs to all adapt and change as well. So
Right.
it's a long term view you have to take, but at the moment, to get it to that point, it's it's difficult. It's not
Right, makes sense.
impossible, but it's
Hmm.
very difficult, because every company in the ecosystem will want to take its needs to be profitable. Otherwise, it doesn't work.
Yeah, yeah, yeah. Right.
You can't have a series of loss making um, um, ventures. And the other thing too, whilst there are government subsidies to try and encourage that, the issue with government subsidies, if they are removed, it then collapses, and then you've effectively put money into a scheme that it just gets wiped out.
Yeah,
So it's
yeah, yeah.
kind of got to work and stand on its own 2 feet, um, as a standalone investment without a government subsidy. and there aren't many of those investments out there.
Makes sense. And now, like walking us through how Sky Infra Capital addresses these challenges, what makes your approach unique?
I think it's a slightly different view. Um, quite frankly, we're looking at multiple power systems that generate power with a smaller ecosystem required. So you're not needing quite as many parts to create that ecosystem effectively. Create the off taker that is needed. So when you're looking at what we were doing before, it's quite a large supply chain effectively, whereas this should and could, what we think, be a shorter supply chain,
Yeah,
shorter time frame to which we can deliver power, and therefore in that sequence you'll get an off taker willing to come and purchase the power that's clean and renewable and fits their overarching long term goals as well as. So it's that's the uniqueness, and then and aside to that, there's an element of strategic land where you would purchase the land and put the power provision on. Where you look to buy the land. Is it near already existing power stations or grid substations that you can connect it in, so you don't have huge costs from A to B to sort of cabling to put it in, etc., etc. So, it's very interesting. But again, what you can do is replicate this sort of strategy more globally. Um, and it's not just for the UK. We can evaluate sites globally and think this could potentially work here. What is it that area region needs, or if there's a particular off taker that's saying we would like to do this but we haven't got the power, then we can
hmm
look to JV with them and try and provide that power.
right, right, makes sense. And like, since you are right in the middle of this market every day, what are you noticing that others might be missing?
That's a really, really, really difficult question. So what it's I think what we've got is the skill set to invest, because we've done it before and over a number of
hmm
years, that and we've done renewables for quite some time, and the team that we've amassed, and the ability to actually deliver these infrastructure projects is probably the key for many, and having the right support companies around us that are able to facilitate and make this happen,
Yeah.
is probably the key, that others may be missing.
Okay, okay, makes sense. But for example, I have a curiosity by then. So when you, for example, talk to potential clients, what's the biggest misconception they typically have about what you do?
I don't think there's a misconception. Um, we're quietly going about our investment thesis. We're quietly looking and analyzing a number of investment opportunities, and as I say, that includes analyzing lots of strategic land, globally, and putting together a very strong team, as I've mentioned before, of other. I mean, that's a group of structural engineers. That's a group of environmental people. That's
Yeah,
it's a wide package of global people that will then end up delivering these investments to its totality, and then obviously working with ultimately the off takers of the power that say, okay, great, I'll come in on that because you're going to produce me X gigawatt of renewable energy power in this location. That works for me because I have a strategic plan, because I want to be located here. Um, for X, Y, and Z reasons. So,
Yeah,
without giving too much away, but that's kind of what you've got to get to is, again, and then that would you would see a marked increase in your investment, and investors would like to see that, obviously.
100%. Okay. And basically, like, how are you like aligning with institutional and family office investors around your thesis?
So depending on the various strategies that we're running and what we feel is applicable, I mean, everything we're doing currently is probably quite large size ticket, as you could well imagine. And then each of the you know sites and whom we want to invest in, there's sort of room for everyone, but it's equally, what are the returns that people want? What are the return expectations? And does this meet with their investing, guidelines,
Hmm.
and their remits? What are they allowed and willing to invest in? And does it meet their requirements? But typically, institutional capital is very, very good, but there are a number of very large family offices that are also inquisitive, I would say, about this type of investing. Looking at renewables is probably one of the newer asset classes that they are thinking about. It's not kind of what I arguably would say is their typical investment bucket, but the larger ones are quite intrigued by it. If it's attached to, let's say, real estate, that's something that they're very used to doing. Um, um, you know, and again, real assets make a big difference. It's tangible. They can go see it, visit it, touch it, and it has a real value.
Hmm.
If a power plant is giving off X, it's and they can put a real value on it. So it's an educational process, as
Yeah.
always with investors.
Right, right, right. Makes sense. But for
Yeah,
example, when you look at your, let's say, top 10% of successful clients that you have, what is the single most common strategic mistake they made before they hired you?
tough question. It getting involved with what and timeframes and returns.
Hmm.
And you've got to get that alignment right. I mean, that the structures are there, the governance is there. It's these are medium to long term returns. Over a number of years. They can stand the test of time, a few cycles. Um,
Yeah.
and that's probably, it's not a quick turnaround.
Hmm.
And
Okay,
that, I
okay,
think
makes
that's
sense.
probably the biggest mistake that they think. But again, it's always an educational process, open dialogue, open conversations, and you've got to manage those expectations as you move along. But I think that the attitudes are changing. I think renewable energy is in the forefront of most people's minds, and trying to have a greener
Right.
world that we live in for future generations. And um, the advance of technology and how these things progress so quickly, it's incredible.
Right, right, makes
Yeah,
sense.
it really is incredible. So what we invest in now could well be obsolete in 10 years.
Yeah,
Because
yeah.
technology, with the advancement of AI, and I'm not going to profess to be an AI expert, but how that could then determine you know product rollout, who knows? It's
Yeah,
moving so
it's
fast.
exactly, it's a compounding effect, basically.
Yeah, so we've got to learn to live with it. Um, Technology is moving at a real pace.
Right, right, right. And now looking at the broader industry, how do you see like sustainable investment evolving towards 2030?
I think I think there'll be more investment opportunity in the sustainable market. As I say, I think there'll be more tech enabled companies and tech advancements that will make investing a wider universe in this space. Um, it'll be interesting to see how the economy uh, approaches subsidies, and if it
Hmm.
continues to subsidize these. I think, yeah, we try and avoid it as much as we can. Um, and maybe, if we simplify some of the um, business models in the first place, and and how value creation is clear and more measurable, and obviously, taxation from a global perspective, if that's simplified, investors and everybody alike. But I mean, it is a complex tax world out there.
100%.
And maybe if there's like kind of more partnerships are formed, operators and developers and technology, um, and that helps us get the scale that we want to drive down the prices.
Yeah. Okay. Okay. Makes sense. And on the flip side, because you mentioned this, how AI and data are reshaping efficiency and analysis in finance.
Oh, I mean, AI is changing everything, um, from modeling to the due diligence that we have to do. We can now process a lot more operational data, construction risk, weather patterns, pricing curves far more efficiently than we ever have to date. You know, where it becomes powerful is in real pattern recognition, identifying risks ahead of the curve,
Yeah.
and or then that produces more opportunities earlier, sooner, that wouldn't obviously be made available to us through manual analysis. We're still on the early adopter of AI, but heavily on the manual, and I'm sure
Hmm.
that will evolve in time. Um, it doesn't replace human judgment. It doesn't replace relationships between people and actually getting a deal done over a boardroom or across lawyers' desks, but it does dramatically improve the speed and the depth of decision making, to a point. So yeah, we will certainly live with it, and there are obviously some forms of the financial world that will greatly speed up.
Yeah. Right.
um, and yeah, we have to work with it. But I still think we'll have to have people that will need to have the understanding of it to make the best use of it, and also protect some form of human element to it.
Hmm. Yeah.
Because we keep flooding it with information, and it keeps learning from it. But some of that information you put in the first place is incorrect, and then that like anything, once it's in the system, as we know, it's there, and it will be either spat out and someone reads it and it's wrong, and yeah, but people will need to be able to have that judgment still. That doesn't I need to
Yeah.
think that through. But can it do factual data items that, if it's taking a piece of legislation, if it's taking data that is out there, that's the public domain, that's been verified, it will just speed all of that up.
Right. 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 Makes sense. And also, in your opinion, like if a founder in your space asked for advice on scaling to the next level, what would you tell them to focus on first?
I come from a operational and structure. So my words of wisdom was, if you get the foundations right, be it the structuring, your team, the risk and the governance, and then balance that with some innovation, that would be my footprint of where, if you've got um, a good governance and operational framework. That would be my key takeaway for someone that asked. You get those right. It's very clear what you're investing in. You've got the good governance and operational framework. You know that will stand you in good stead for the longevity. And reduce risk in downturn times.
Okay, okay, makes sense. And
That
it's
that
it.
that won't, in my as a philosophy, that won't change going forward. Yeah,
Mm-hmm.
you've got to balance the innovation with risk, but overriding, you've got the governance to control it. Should things go other ways. So yeah.
Yeah, yeah, makes sense. And I love that. Like, it's a great advice. And it sounds like you're ahead of the curve in many ways, which make me curious about like your growth plans. So, how are you looking to grow for the next year?
We've got we've got a number of global opportunities. It's analyzing them on their risk reward profiling, putting those structures in place that I mentioned, that we've got the good governance, that we can oversee and oversight. We aren't the owners. We aren't the owners of the investors' monies. We're merely but the custodians,
Mm-hmm.
and managing that and having fiduciary responsibilities and managing it appropriately. So, again, we've got some global opportunities, and it will be just evaluating those, and where the best investment opportunity arises, and then actioning that with, as I say, with the frameworks, with the operational structures, and the governance that we are comfortable with. It's you know whilst it's not your money, treat it as your money, because you just don't want to throw it away.
Mm-hmm.
So you do the
Yeah.
right thing, and have downside protection risk, and get that covered. And it's long term again. So you just get the foundations right. You can build a solid house.
Mm. Okay, okay, makes sense. And when you look like at how companies in your space approach growth, what separates the ones that break through from those that plateau?
So yeah, I mean, because it's a very nascent, early sort of renewables. I guess is still in a infancy. I would argue. It's those that are have the ability to scale, those that have fundamentally customers that have can generate revenue, and make, and again, build on that, and because obviously that will fuel everything that goes before them.
Mm.
If you've got scale, the ability to grow, capture market share, ultimately they will be the ones that will survive, um, because they've got the customers and paying customers.
Mm-hmm. Okay, makes sense.
And it's sort of 101 really. If you've got revenues, and then investors are more likely to be attracted to you. You layer that with a good governance, and you've got scale and you've got growth. You can take it to the next level. You can weather a few storms,
Mm-hmm.
and you could also keep innovating as well. And there'll be firms that just stick to their knitting, and they do that particularly well because that's the sort of company they are. And then obviously, if you're going into tech innovation, that will just be evolving at a rapid amount of time. But you need to be of size and scale to keep up with the innovation that is required and the cost that comes with it.
Mm-hmm. Mm-hmm. Okay, makes sense. And as you wrap up for listeners who want to learn more or potentially work with Sky Infra Capital, what's the best way to get in touch?
You can go onto our website and contact us. And that would love to do that. We're always looking out for a plethora of backgrounds, quite frankly. Not always your typical financial investment banking route, but captains of industry that
Yep.
understand their markets in renewables, and We have a number of transformation leaders that have also just successfully run businesses, because we can deploy them into the smaller company, and they can deploy their knowledge of how to run smaller companies. Sort of transformation leaders. So yes, that's probably the best way,
Okay,
and the
okay,
people
perfect.
we look out for.
Perfect, perfect. So thanks for joining today's look and for this amazing podcast session. And for anyone listening, make sure to check out Sky Infra Capital socials below in the description, because this episode was packed with value and I can wait to see what you build next.
Thank you very much, Alexander.
Great. See you on the next episode then.